Welcome back. Among the stocks which are in focus on the downside today is Allcargo. It's been lower by almost 6-7% and currently further lower for this month as well. They have the Feb monthly update which has come in year on year. The less than cargo volumes have grown by about 7% and the full cargo volumes have grown by about, full container volumes have grown by about 5% year on year. Feb volumes were lower by 5% as compared to Jan. That's largely because Feb is a smaller month and at the same time there is the Chinese New Year factor that plays out as well. What's business looking like going forward? We have with us Ravi Jakhar, who's the Chief Strategy Officer, joining in as well. Thanks a lot, Ravi, for joining in. And that really is the question. You know, volumes have increased year on year by 5 to 7%. What about realizations? And what can one expect in the fourth quarter and FY25? When does the situation improve?
Yeah, so basically, as you mentioned about the monthly updates, we have seen that the performance has been better than last year in terms of the volume. So there's been, over the last, 3-4 quarters, we had been seeing that volumes were declining. And then December ending quarter, we witnessed that the performance was stabilizing and kind of started to move up. We are seeing the similar trend wherein volumes are now holding up and we are able to expand in some of the focus trades where we are underpenetrated, and that is allowing us to marginally improve the volumes. Generally, Feb is of course lower than January, but when we compare with the last year, a 5 to 7% growth is quite satisfying considering the overall economic outlook, when the trade volumes have still not bounced back. The way we see the global trade in the short term, near term 3 to 6 months, we believe that the pickup should start sometime around the summer. Usually June onwards, the shipping season kicks in, and we believe that this year that season should work well as the interest rates are not likely to go up any further, rather they might start coming down in the second half of the calendar year. So with all these indications, our belief is that the macroeconomic indicators should turn positive in the second half of this calendar year. That should lead to increased global trade, and with our improved market share, we should see a good performance in the second half of this year. Over the short term, next 2-3 months, I don't see any significant change. Things should stay mostly range bound.
Okay. Ravi, if you could just dwell a little more on the international trade, because you did mention that you're only going to see a recovery from July to December. So you're sticking by that guidance. And if you talk about a recovery, to what extent are you talking about in terms of, say, volumes as compared to maybe a year ago?
Yeah, so I would say, if you look at the global trade that had been growing at about 3%, LCL on the back of, small and businesses going global and on the border, cross-border e-commerce, the LCL market had been growing at about 6%. And as a company, we had been gaining market share, allowing us to demonstrate double-digit growth rates. Now, over the last 9 to 12 months, that scenario changed with the trade going down. What we expect is that the normal trade growth rate should come in the second half of the year, which means that we should see 6% odd growth in LCL market in the second half as things return to normalcy. And we are quite confident that with our initiatives, we should continue to gain market share, and that should mean that we should grow at higher than market rate. So that's the same outlook we've been sharing for some time, and we don't see any change in that.
All right. What about margins? The third quarter as well, there was a sharp decline that we saw in your overall margins. So even as business momentum is seeing some sort of improvement in this month year on year, and the next couple of months, it's likely to be a little sluggish. Where do we see margins from here on? They're just under that 4% mark.
Yeah, so if you would notice, the third quarter was slightly better than the second quarter, if you look at the international supply chain segment of our business. And margin for us is largely driven by utilization and how many 40-feet containers we have. And that's why in our monthly updates also, we talk about the same. Now, if you look at last 3-4 months, we have seen that the 40-feet container utilization has gone up about 5%. So that should slightly add to the margin improvements. The second key factor is utilization, and that's something which makes a huge difference on the LCL profitability. That at this point in time has remained range bound on an index of 100. It has largely floated between 99 and 101. So as the volumes start coming back in and we see 5 to 7% additional volumes, like I said, estimated in the second half of this year, at that point in time, it almost plays like a multiplier because the utilization goes up, your costs remain same, your containers are going in more packed, and that allows you to make more margin. So we should see marginal expansion on the back of increased utilization. Besides that, we have also been taking initiatives on the cost reduction side, which should impact not the gross margin, but on the EBITDA. And that's where we have already taken most of the initiatives, but they all come in with a time lag. From April onwards, which is the first quarter for FY25, we should see some improvement on account of the cost reduction as well. So I would say that FY25 should look better than FY24. There should be sequential improvement because all these things are sequential in nature. Our cost reduction initiatives, their outcome, the recovery in the global trade. So all these things, in our opinion, based on the current view that we see from the economics on the global trade, we believe there should be a sequential improvement in the coming quarters. That's our view.
Okay, all right, Ravi, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Allcargo Logistics talking about their business outlook. The stock currently at around 70.6 odd rupees, down around 6 odd % in what is a weak market. In any case, it's off the highs of around 97 odd rupees that the company was trading at some time ago. Well, we need to take a short break, but on the other side, Hormuz will be putting the focus on mutual fund investments in the PSU index. Stay tuned.